Good afternoon. I hope you are all okay and you are safe back home there. I'm making a presentation on final accounts that is on the balance sheet. If you can recall that the last time we discussed this subject topic was in class before the indefinite closure, and I thought it wise to deliver this lesson to you online so that we can definitely try to go through it while it's at home. Now, we looked at the trading and profit and loss account when we were together in class, but now I want us to look at the other part of final accounts, which is the balance sheet. Okay. Now, before we go any further, I want us to define what a balance sheet is. There are many definitions of a balance sheet, but regardless of those many definitions, there's one thing clear, that these definitions that are provided, they have very similar characteristics or features. So when we define a balance sheet, we are simply saying it's a statement of financial accounts. Remember that when we defined the trading account and the profit and loss account, we said that the trading and profit and loss account, they are collectively called income statements, because those help us to determine the gross profit or loss, as well as the net profit or loss that we've made in the business at the end of the financial year. But for the balance sheet, this one is a statement of financial account because it records all the assets, liabilities, drawings, and the net profit, as well as the capital of the business. It shows the financial statements of what assets you have, the liabilities that you have as a business, how much money you withdrew from your business in that particular financial year, and also the income that you raised in that particular financial year. Now, just like the trading and profit and loss account, the balance sheet is prepared at the end of the financial year. Now, we need to know what then goes into the balance sheet. Now that we have given a definition of what a balance sheet is, you need to know what items go into the balance sheet. Now, in the balance sheet, we have the following that go there. We have, firstly, the fixed assets. So when you are making entries in the balance sheet, you need to begin with fixed assets. Enter all the fixed assets that you have been given in a question. Now, you know that fixed assets, these are assets that stay for a long period in the business. These are assets that they cannot easily deplete or finish, or they cannot be easily replaceable or replaced within a single financial year. So, for example, a motor vehicle or a motor van, fixtures and fittings, the furniture, premises, machinery, land, buildings. So these stay in the business for a longer period of time. I can give you an example of the classrooms you learn from. The classrooms are buildings, and St. Ambrose, being a school that is a private school, being a business entity, has been using these buildings for a very long time. We don't need to be buying buildings, or we don't need to build almost every year. But the same classrooms that we are using are the same classrooms that will be used for quite many years to come. We can also give an example of the school track. The school track is an example of a fixed asset because it has been used and it is being used for quite some time, a number of years. So the school, St. Ambrose, doesn't need to be changing a vehicle almost here and there. So these are simply examples of the fixed assets which you must consider whenever you are presented with a question to make entries in the balance sheet. Now, after you have entered all your fixed assets, you must add up the fixed assets that you have, and then you record the total. I'm going to demonstrate this as I'm going to teach you by a way of showing an example so that you understand how the fixed assets are entered first in the balance sheet. The next thing, after you have entered your fixed assets, you need to enter the current assets. Now, current assets include the following: stock, cash at hand, cash at bank, and debtors. By definition, current assets, these are assets that cannot survive more than a financial year, more than one financial year. These easily finish. For example, stock. The stock are the goods that you have in your shop. For example, the goods that we have in the tuck shop, school tuck shop. I'm sure only a few of the groceries remained in the tuck shop prior to the indefinite closure. And I'm sure that as you come back after the 21 days, the person who is in charge of managing the tuck shop will have to restock the tuck shop in order for business to continue. Now, in the balance sheet, the stock that you enter under current assets is the closing stock. Remember that on the entries that you are given when you are preparing the trading, profit and loss account and the balance sheet, you are given two stocks. We have the opening stock and the closing stock. Now, as you go to the balance sheet, under current assets, always put the closing stock. Always put the closing stock. Now, apart from stock, under current assets, you have to put cash at hand, cash at bank, as well as debtors. Surprisingly, these are the only current assets that must be recorded under the current assets section. No other asset should be included under the current asset apart from these. You must also understand that the current assets we are talking about here, in a question, examiners will not give you to enter all the current assets. Sometimes among the entries that you have been given, there will only be maybe cash at hand and debtors and stock. Of course, the stock will always be there because of the requirement for you to prepare the trading account, the profit and loss account. But remember that the stock that goes into the balance sheet is the closing stock. Now, please take note that these are the only current assets which must be recorded under this category. I've already highlighted on this point. However, take note that in an exam, you will be given only 2 or 3 to enter. But the most important thing to know is that they are current assets. Once you have entered them, add them and record the total. So you must add the current assets, just like you did on the fixed assets. Then you move to the next, where you have to enter the current liabilities. Now, we know that a liability is simply, in a simple language, something that is not yours, something that you have not generated using your own resources. This is, in a business language, this is money that you have borrowed elsewhere in order to manage your business. So, we have been looking at current liabilities and long-term liabilities for quite some time now. When you are looking at creditors, we know that creditors are a current liability because these are the people that supply us with goods that we intend to sell in our business. Meaning, we purchase from these people on credit. They are our creditors because they have given us their goods for us to resell, but without us paying cash, we have actually gotten these goods on credit. So they are our creditors and we are their debtors. Now, you know what a bank overdraft is. If you don't know what a bank overdraft is, I will talk about it more when we'll be looking at banking, which will be the next topic after this. But in a nutshell, a bank overdraft is a situation where you have an account, let's say a current account, which allows you to withdraw more than what you have in the account. So, if for example you have 20,000 in your current account, but the bank allows you to withdraw more than that, so meaning there's an overdraft service being offered to you. Now, these are the only items which must be entered as current liabilities. Under current liabilities in the balance sheet, always enter creditors or bank overdraft, or the two if they have been given to you in the entries. Once you have entered them, add the total and record it. Now, we move to the next. After you have entered the current liabilities and you have found the total, the next thing that you need to do is to find the working capital. Now, in order for you to find the working capital, you simply have to subtract the total for the current liabilities from the total for the current assets. So, total for current liabilities, remove it from the total for current assets. Then you have found the working capital. Then the next thing is for you to find the net assets. In order for you to find the net assets, you just have to add the total for the net assets. You just have to add, I beg your pardon, you just have to add the total for the working capital. So you just have to add the working capital to the total for fixed assets. Remember that you, at the beginning of your entries into the balance sheet, you began by adding up the assets, fixed assets that you have. So what this happens is that as you try to find the net assets, you simply have to add the working capital, the total for the working capital, to the total for the fixed assets. Then you have found the net assets. Then you record it. But you record it on the column where you had found the total for fixed assets. Now, the next part of the balance sheet is the financed by part. Here we are simply saying that all those assets, all those current liabilities, all those current assets, they were financed by the following resources. So meaning here what we are saying is that there is a part which you, the owner of the business, had to play in financing your business. In short, you are showing us how much money was used to finance your business, either from your own money or borrowed money. This section is very important to know when preparing the balance sheet, because it is helping you to know how your business was financed, including knowing the capital that you employed. So, when you are making entries under this section of the balance sheet, you start by indicating the capital of the business. After you've indicated the capital, bring the net profit or net loss. Remember, this net profit, we found it when we calculated the profit and loss account. But you must be warned that you have to be careful. You have to be very careful with your entries in the profit and loss account, because any mistake that you are making will seriously affect the this aspect. So, what we are saying here is that you just have to be careful right from the beginning when you are calculating your trading account, profit and loss account, up to the way you are making entries into the balance sheet. So you just have to be extra careful on that, because any mistake that you make at any stage will seriously affect the entries, the other entries, or the other results that you're trying to find in the balance sheet. So you have to be extra careful. That's why I'm emphasizing here that let your net profit or net loss be the correct figure. Then after, you must add the long-term liabilities. You add them, such as a loan from someone, mortgage, or bank loan. Long-term liabilities, these are debts that you owe but will require you to take some more time or years to repay back. Then after that, you add the capital, you add the net profit or loss and the long-term liabilities, and then you record the total. Then remove or subtract drawings from the total you found when adding the capital, net profit or loss, and the long-term liabilities. The answer that you find after the subtraction is the capital employed. Surprisingly, this capital employed is going to be the same figure as the net assets. This means that your balance sheet is balanced in terms of the net assets as well as the capital employed. Now, in exams at times, there could be a mistake where the net assets are not equal to the figure for net assets is not the same as the figure for capital employed. All the same, that could be the problem of the examiners, the people that were setting the questions. But it is mostly realized that the capital employed, the figure is the same as that for the net assets. Now, there is a mistake, or rather a tendency by you learners wanting to make assumptions that, oh, now that I've found the net assets, if this is the figure for the net assets, I'll automatically put the same figure for the capital employed. You are cheating yourself. Suppose examiners made mistakes, like the way I've just explained, and they know, the examiners know for sure to say, the figure that should be for capital employed is this. So if you cheat, you will definitely be caught, and you lose marks. So make sure that you do the correct thing. Don't make assumptions. Always do the correct thing and verify your entries. Now, I want us to demonstrate how to make entries in the balance sheet. Now, remember that I gave you an example in your notes, and of course I expect that we can do something together. We demonstrate how to make the entries. So in the example, of course, I worked it out for you, but in the video lesson I want you now to understand how to make entries by way of an explanation. So the question was gotten from or taken from a past examination paper for Examination Council of Zambia for 2018. And the question was, the following balances were taken from the books of Mukwena Kalakula as at 31st March 2016. Now, remember here, I want us to focus only on the balance sheet, because I already taught you on how to make entries in the trading account, how to make entries in the balance sheet. So I already worked out the gross profit, I already worked out the net profit for you. So here I'll straight away look at the balance sheet. So we'll start with the title of the balance sheet. So it will be, I believe you can guess. If you have guessed it right, then it should be like this: Mukwena Kalakula's balance sheet for the year ending March 2016. So let me try to put it at the center. Good. And I can maybe put it in bold. Wonderful. So remember, as you make entries, or before you make entries in the balance sheet, make sure that you put the title. Even in the trading account, start with the title. I know the trading account and the profit and loss account, these usually you make entries in one table because there's only one table provided for you in the exam. Then there's a separate one which is for the balance sheet. But my emphasis is, please, before you do anything, put the title. Put the correct heading, just like the way we have done it here. So, we have the details column. In an exam, remember that you are given this table, so all you need to do is to make the entries. As we discussed at first, when I introduced this lesson, we said, what is the first thing that you need to enter? Who can guess for us? Okay, I believe someone there has guessed for us correctly. But if you have guessed it wrongly, well, we are here to correct each other. So we start with fixed assets. So you write here fixed assets. Now, when you look at your entries, you have fixed assets. We have furniture. How much is furniture? Okay, good. 84,500. Furniture is 84,500. Then we come to the next one. Which other one is there? Okay, we have premises. Premises is how much? 240,000. $240,000. We have to check if we have any other fixed assets that have been given in the entries. Okay, I've seen that we don't have. So, what do you do next? You add. You make additions. So, when we add 84,000, when we add 84,500, 84,500, add with 240,000, it gives us 324,500. 324,500. So that's the total. That is the total for fixed assets. That's the total for fixed assets. Next thing is you enter. Let me just highlight so that you know. So next thing is you enter the current assets. You enter the current assets. Then we must then go to our entries. Question. We check if we have any current assets that we have been given. The first one is stock. And if you can remember, which type of stock are we talking about, which I advised? The closing stock. Very good. For that one who has understood it, the closing stock. In this case, this is the closing stock. Because remember, the business was ending in 2016 on the 31st of March. So the stock which has got the last date when the business is actually ending is the one that you write here. So stock is how much? Closing stock is 14,500 kwacha. 14,500 kwacha. What else are we given as current assets? Okay, for that one was found it, we have cash in hand. Cash in hand. Cash in hand, which is 15,000 kwacha. Cash in hand is 15,000 kwacha. Do we have any other? Good. We have debtors. We have debtors. Remember, debtors are an asset to our business. I think we have been talking about this for some time now. Debtors are current assets. These are people that owe you money, so you expect money from them because they got goods from your business on credit. Okay, so debtors, it's 75,000 kwacha. Do we have anything else? We don't have cash at bank, so we cannot put it here. Now we find the total. $14,500 plus 15,000 plus 75,000. This gives us what's found the total. Please enter it, and mine is 104,500. I'm sure it matches what you have found. Put it in bold. So that's the total. Let's move to the next thing. What do we do? All right, we enter the current liabilities. The current liabilities. Let's identify the current liabilities. We have creditors. Creditors. Creditors, it's how much? 35,000 kwacha. We move to the next because the space has finished on my slide, but I'm sure for you still have enough space. So we move to the next slide. Where I'll enter the next current liability that I have on the entry list. We said there are only two. Bank overdraft. Bank overdraft. Bank overdraft is how much? It is 18,000. Okay, then we move to finding the total. If you add 35,000 to 18,000, what does it give you? Have you found it? Okay, if you have found it correctly, please verify it with mine, because my calculator tells me that I found 53,000 as my total. Highlight it. Now, let us go to the next thing. What do you do? Remember on the instructions, when I was explaining, I explained that after you have done your entries on the current liabilities, after you have made the current liabilities, you have entered them, you have made the total. The next thing that you should do is what? Finding the working capital. Finding the working capital. So working capital, in order for you to find the working capital, you simply have to subtract the current liabilities from current assets. Remember, our current assets, the total we found is 104,500, which is this one here. This is the working capital. This is the total for net current assets. So we then subtract 53,000, which is the total for current liabilities, from 104,500, which is the total for current assets. Then it will give us what is the answer that you have found? Mine is 51,500. Now, for me to be able to calculate the next item, I'm going to move this to the next column. Move this total for working capital to the next column. So that I'll be able to do my calculations properly. Okay. Right. So I'll bring my 51,500 kwacha here, because the next thing I want to do is to find who remembers the net assets. To find the net assets. So, what did I explain about what you should do to find the net assets? If you have the correct thought, is the one that I'm having right now, you realize that in order for you to find the net assets, you simply have to add the total for working capital to the total for the fixed assets, which is this one here, 324,500 kwacha. So when you add What does it give you? For me, it has given me 376,000 kwacha. 376,000 kwacha. So that's your net assets. That's your net assets. So now we go to the next part, which is financed by. The financed by section. Under the financed by, we start with, like I guided, we start with capital. Then we are going to include the net profit. If you check your profit and loss account, which I already calculated for you, you find that the net profit is 98,500 kwacha. Then your capital, check on your entry list. Your capital is 102,500 kwacha. 500 kwacha. So this is 98,500 kwacha. Next, you need to add the current liabilities. Add current liabilities. Under current liabilities, we have loan from Zambia. So meaning you got a loan from Zambia, which is 50,000 kwacha. Then you have a mortgage. You have a mortgage which is 150,000 kwacha. Then you now find the total. So meaning you add capital, net profit, and the current liabilities. So you can say 102,500 plus 98,500 plus 50,000 plus 150,000, which gives you 401,000 kwacha. We can highlight it. Now, let us bring the drawings. How much money you withdrew throughout the financial year. The drawings are, if you check in your on your entry list, 25,000 kwacha. kwacha. Now, we need to find the capital employed. We need to find the capital employed. So to find the capital employed, you simply remove the drawings from the total that you found when you added the capital, net profit, and the current liabilities. So capital employed, to find the capital employed, I prefer that you put the total that you have found, the capital employed, in the last column where there is the total for net assets. So when you say 401,000 minus 25,000, it gives you 376,000 kwacha. As you can see, the capital employed is the same as the net assets. So meaning this is your balance sheet. So I have given you an exercise which I expect you to practice using the example I have given you. So do the exercise, follow how we've been making entries in the example for you to know exactly what to do. So thank you very much for those that were paying attention. Remember that online learning has a lot of distractions, but train your mind, focus on exactly what the teacher is teaching. Play this video over and over again so that you can try to understand what I've been teaching you. Next time we'll meet, we'll do a revision, a recap of what we've been doing so far. Stay safe, take care of yourselves, continue safeguarding your lives. As you know that COVID is real and a lot of our beloved ones have gone, a lot of our neighbors have gone. Please take care of yourself and always be the best you can be to perfect your studies. Thank you.